Hi and welcome to this live currency strength indicator table video. My name is John. I'll be taking you through the charts this Wednesday, the 16th of November. Here you can see we have the live currency strength indicator tables in front of us. We have the trend traders table and the day traders table. These are showing the same studies but just on different time frames. So our trend traders is our higher time frame and the day traders is our lower time frame. You can see here some of the currencies are highlighted in green. That is showing us that there is confluence between the two trading time frames, and that's where we'll be focusing our attention in these videos. The tables auto update every 15 minutes 24/7, so wherever you are in the world you can access charlesclifton.co.uk and get the latest update of the tables. So what are the tables showing us today? Well, it's showing us that the New Zealand dollar remains the strongest currency on the trend traders table, followed by the second strongest currency, which is the Australian dollar, followed by the Japanese yen, which is S3. W1 is the US dollar. The second weakest currency is the Canadian dollar, and the third weakest currency is the pound. On the day traders, we have the Australian dollar as the first strongest, so the strongest currency. We then have the New Zealand dollar as the second strongest currency, and the Swiss franc as the third strongest currency. Dollar is the weakest also on the day traders table. So it's showing the confluence there between the two time frames, and also CAD is W2, but then on the day traders it's followed by the Japanese yen. So you can see here the yen appears twice, but it's not shown as highlighted because it is on different sides of the table, meaning that we shouldn't really be focusing our attention on the yen right now. Now the New Zealand dollar has actually been on the strong side of the live currency strength indicator tables for some time. So if I actually go to the rolling 30-day data and we go all the way back to the 26th of October, you can see that's when New Zealand US dollar first appeared on our trend trader side of things. So we're going to take a look at that and what's happened to price since that point. But you can see that it's been on our tables then for some time. Kiwi in particular has topped the strength side of the trend traders for a number of days now, so it's been quite interesting to see the development there of the New Zealand dollar. So we're going to jump into Kiwi US dollar. Is there, basically what we want to know is the momentum going to continue, or are we at a point where maybe we should hold off slightly? So let's jump into Kiwi dollar. You can see that I've mapped out some areas of interest. Now this is the monthly time frame, and we're looking at this just because I want to get the bigger picture. What is price doing right now in the grand scheme of things? Well, actually we had a really interesting support point coming into the market. So you can see here I've noted the 0 spot 55.50 handle, which was this previous low through here, but you can also see we had multiple trend line confluence in and around that area. So at that 0 spot 55.50 handle, there was a strong confluence that price may start to turn round in and around that area. So you can see here price has since rallied from that point, so it was a really good area to start looking for long opportunities from, especially as well if I just flick down to the daily time frame very quickly. You can see that the 26th of October is actually this bullish candlestick in here. Okay, now ever since that, price has rallied over 365 pips. If you'd waited for a retest of a key support point, it's actually rallied 460 pips. So that's quite an interesting thing to look at when we looked at previously at the 30-day rolling data. I'm going to jump back to the monthly because we are coming up into an area of interest. So what could we take from this bigger picture outlook? Well, we are at support. Price did find support here and did bounce to the upside. Now we are technically trading within this sort of area here between the spot 7400 and the 0 spot 55.50 handle. Okay, you can argue that the 0 spot 62 handle is where the real range is of the market, because price does tend to bounce between those areas, although we have breached that 6200 level twice now with a move to the downside. But still an important level to note because it's where price originally started to bounce before we saw those breaches. So price is now back at that level. Okay, so what we're going to see at that level is either the buyers that have been long from the 0 spot 55.50 handle may start to take off some of their profits there potentially, which could lead to a little bit of a reversal in the move here. Alternatively, we could see price move higher. Now you can see I have this trend line in over here. Okay, so that might be an area for price to go and target if it is going to remain bullish. So we could see a continuation of a run up if the price was to trade back through the 0 spot 62 handle. Of course, then if price trades through that, we've got the potential for price to move towards the 0 spot 74 handle. But that is probably something that is way off at the moment. Let's go take a look at our weekly time frame then. So our weekly time frame showing us that price has recently breached a bearish channel here. You can see that this channel formed within the previous range. We then breached a couple of levels of interest. So we have the 65.25 handle in here, which price breached to the downside. We then have that 0 spot 62 handle where price is now, which again price breached to the downside. But you know, we're trading outside of this bearish channel now, which could suggest that buyers are definitely in control of the market here. However, what we could see now, we have horizontal resistance combined with the trend line resistance. If price was to maybe come back within the bearish channel here, it could signify that we are going to push back to the downside here towards that 0 spot 55.50 handle. Now to me, with price being at this key level, I think it's going to be an interesting one to watch from a trend trader's perspective as well as a day trader's perspective, because if I just go down to the daily time frame, I actually think that price is a little bit overextended here. We can see that we've rallied to the upside. We haven't really had a sort of reversal in the market here. We haven't had the market taking a breather for some time. The only time it did it really is when it came back to the 0 spot 57.50 handle before sort of taking off to the upside here. So I really do think that maybe that this 0 spot 62 handle, we could see a little bit of a relief to this recent rally. Now if it does find a little bit of relief here, what could we expect? Well, like I said, we could expect a little bit of a reversal in the market. So I'm actually just going to dive down into the 8-hour time frame, because there's a couple of interesting levels I wanted to point out through here, and one of those levels is the 0 spot 6 handle. And the reason why I'm pointing this out is because you can see that it acted as a high point through here. Price has then has pulled back from that area or sold off from that area. We then breached it, moved to the upside quite significantly. But to me, that area could be an area of possible retest if price was to come back. So I think if we came back down to the 0 spot 6 handle, it could be important because we have multiple levels of confluence around this area as well. So we have sort of the bearish channel through here. Okay, so we have that resistance, but if price has broken through it, could act as support for price. Okay, we also have this bullish trend line that I've drawn in just through here. Okay, so you can see on that bullish run that we've had most recently coming from the 0 spot 55.50 handle, which we pointed out on the monthly and weekly time frame, you can see that price has been in that bullish mode since then. So that also coincides with that 0 spot 6 handle if we were to see a pullback. So I think from a trend trader's point of view right now, you want to sit on your hands due to the fact that we are at resistance and price looks semi overextended here. You can see that we've kind of pushed into that impulsive phase, and we're at that point where it does look to me like we're a little bit overextended. So as a trend trader, I'll probably be looking for price to come back down towards the 0 spot 6 handle. If we then see the New Zealand dollar reappear on the currency strength indicator tables, then that would, for me, be an area where we could start looking for long opportunities again. As a day trader, you may also want to sit on your hands, because if we break above this point, the next area of interest is going to be the 200 moving average, which is at 0 spot 63.21. But then above that, you've got the 0 spot 65 handle. Now, if I just go down one more time frame on the 4-hour time frame, like I've said before, I do feel like we're starting to lose a little bit of momentum here. So if I was a day trader, I probably wouldn't be looking to see if price would break through this level at the moment. I would also be looking to see if price would fade back from this point. So as a day trader, you may actually want to be watching the day trader side of the table to see if the New Zealand starts to fall away from that side. You can see that actually, if I just bring that in, we can see that New Zealand has dropped to S2. If I actually go a couple of days beforehand, you can see that the New Zealand is starting to drop away from the day traders, and you can actually see on the 14th of November it appeared on the weak side very briefly, as well as the sort of 11th as well, and even on the 10th it appeared as the top. So you can see it has some points where it does start to weaken, and I think if we were to see it fall away from the day traders here, come back on the weak side of things, and then maybe even start to disappear from the trend traders, that's when we'd know that that pullback potentially is on for Kiwi dollar, and a move back to 0.6 could be the likely outcome there. However, everything's saying that we should be still looking bullish at the moment. I just wanted to point out that we are at that 0 spot 62 handle, so you need to take caution on Kiwi dollar here at this point. Now, another sort of Kiwi chart that I did like is Kiwi CAD. If I actually just bring in Kiwi CAD very quickly, we can see that Kiwi CAD also finding support down at these key areas. So that was the 0 spot 77 handle. If I just go up to a monthly chart and zoom in, you can just see that 0 spot 77 kind of originated from these lows back in 2012, and you can see that price found support here again and is moving higher. Now, if we just look at the context, if I just go on the weekly and look at the context of this sort of downward trend that's been forming in the market here, you know, we are again approaching some key areas of interest. We've got the 0 spot 83 handle, we're at the 200 moving average, we're approaching resistance over here as well. So again, another Kiwi pair heading towards an area of resistance. The only thing with Kiwi CAD is you've got a little bit more room to go if you were going to look for an opportunity. So the 0 spot 83 handle is a good area to target, and on the daily time frame here, I've drawn in this trend line support with horizontal support at 0 spot 8025. So I think actually if price was to come back down towards this trend line and find support, there could be an opportunity to see 0 spot 83 coming in. But that could also coincide with the New Zealand dollar being at the 0 spot 6 handle as well. So definitely something to be aware of there. But Kiwi CAD does have a little bit more room to go if you were going to look for any type of opportunity going into today's session. So I'm going to leave it there. I hope you enjoyed that video. If you are watching this video at a later date and are interested in the currency strength indicator tables and how you can implement this into your forex trading, then please head over to charlesclifton.co.uk. Here you can have a trial period for £1, see if the currency strength tables are for you, and yeah, I hope you enjoyed the video and I look forward to speaking to you soon.